Hello and welcome to another edition of the Deal Flow Show. I'm JP Maroney, your host, along with my co-host for this and many episodes, Mr. Paul Nicolini, Regional Director here at Harbor City Capital. On today's episode, we've got a very special guest. His name is Bill Glass from Gentry Mills Capital, and you've got a background with this guy. I'm going to let you maybe lead us off on some questions, and I'm excited about getting to know you, and especially getting to know your family and the son that came on there at the end and said that we had enough ugly on the screen already and we didn't need anyone else. So. But I think he was talking to me.
We don't know that exactly, but.
All right, so let's jump into the questions and get to know, let our guests get to know Billy a little bit better.
You know, Billy, we can start right in with telling us about Gentry Mills Capital.
Sure. I mean, Gentry Mills Capital was something that I formed back in 1997 as a consulting entity when I was sort of basically working as a wholesaler worked for other people for many years. And I put together this company, Gentry Mills Capital, and it was 96 or 97, Becky, I can't remember, but I think it was 97. And we formed it to consult with people because I was fully licensed at that time and we had to have something for our outside business activities. We changed the name in 2006 to Gentry Mills Capital when we went into the full-time deal business and putting together our own offerings. And so that's a little bit of background about Gentry Mills.
Paul may know this, but I've got curiosity questions because I read here background NFL. I want to get into that in just a few minutes and talk about maybe even some of the parallels. But how did you actually get started in the capital markets? Can you talk a little bit about that?
Sure. I mean, I went to Baylor University and I played for a couple of years at Cincinnati after I got out of being at Baylor and played football at Baylor. And I went to work directly for a man by the name of Hank Dickerson here in Dallas in 1981. And, you know, at that time, there were two large real estate firms in Dallas, Hank Dickerson and Company, who I was very fortunate to get to go to work for, and Henry S. Miller. And so Mr. Dickerson taught me the real estate brokerage business. And while we were, you know, involved in that, and I was learning the real estate brokerage business, I became really close to Mr. Dickerson, and he taught me about partnerships, putting together partnerships. And, you know, I would take a property, say, you need to go show this to this buyer and that buyer. And you know, as the market sort of got worse, he said, you know, that's a great property. Nobody's interested right now, but we should buy it. I said, that's a great idea, Mr. Dickerson, but we don't have any money. And so he said, look, we'll put together a Texas partnership, a Texas joint venture. And so those were the old general partnerships. And so we started putting joint ventures together, and Hank taught me how to do that. I became very interested and actually left Mr. Dickerson in 1983 and started my own company to put together joint ventures called BGI Commercial Real Estate. And I put together about 50 land syndications and sold those to a public company. And after that, I was really hooked on raising capital and syndication business in the securities industry. So that's how we started.
And so what kind of investments are involved or underneath the Gentry Mills Capital?
Well, we've really sort of focused on hospitality, although we have a wide ranging real estate background in office and industrial and triple net leased warehouses. But we've really focused since 1986 on hospitality here at Gentry Mills Capital. We really, there's a lot of things about hospitality that we really like, and that is that we can change the rates on our rooms, on what we're selling, if you will, you know, as many times a day as we would like. I mean, we can bring the rate up or down to capture business. If the market is soft, we can lower the rate and capture more business. And if you have a very tight market, we're fortunate because we work with Hilton and Marriott, and we get a lot of advice from them every day on what we should do with, you know, our room rates. And obviously they're interested in making franchise fees, and the more they can increase our revenue, the higher their franchise fees are. And so it's a great marriage. It really works well for us.
Bill, you mentioned Hilton hotels. How did you get involved with Hilton? And then also, as a two-part question, how do you acquire your hotels?
Well, the way we originally got involved with Hilton was that we basically had some partners that we had worked with in the previous life in the hospitality industry. We had provided some capital to them when I was working for another firm. And that was the old American Liberty Hospitality firm in Houston. And we started working with American Liberty Hospitality, and they have a long-standing history with Hilton Corporation. Nick Massad, their president, went to the Hilton College of Hospitality there at the University of Houston, and very big donor to that school of hospitality. And we did our first deal on the west side of Houston at I-10 in Derry Ashford, which was a 192-room Hilton hotel, and we built that property right before another hurricane that was coming to that area. Built it. We had minimal damage, and we had a great success story with that property. But that's how we got involved with Hilton, and and through a relationship with the developer. That's the way we source our properties. We work with developers. Many developers that we've worked with in the past come to us and say, we have this project or that project, and that might have a Hilton project or a Marriott project or a Hyatt Place project. And so that's basically how we built our relationships with the different flags.
So you're the sponsor in the deal, and then are you taking carry? Is that how you've built your business model, or is there?
At the beginning, when we were working with like Nick and some of the other developers that we worked with, we took a carried interest in the program. And then in several occasions, we've just gone into the property ourselves just directly. We bought the land and built the property from the ground up, and we were the franchisee.
You have a background in the NFL, a history there. Can you talk a little bit about, just kind of give us an encapsulated view of that career and maybe a couple of highlights if you don't mind, and then I have a follow-up question to that.
Sure. Well, my career was very short. I grew up in the NFL because my father played for the Cleveland Browns and Detroit Lions. He ended his career. He played for 11 years in the league, and he ended his career at Cleveland. And so as a boy, I was in an NFL locker room, and that was always my goal to be a player at some point, if I could possibly do it. And so my goal was from a very young age was to play in the NFL. And so I did that. I was drafted in 1980, I suppose, 1980, and played in 81 and part of 82. Or I played in 80 and 81. And that was my last year. Got hurt, but my dad calls my career a cup of tea. So very short. I went up there and I made the team, played for a full season and part of another season, and then I got cut and got back to Dallas and went to work for Mr. Dickerson in the real estate business.
The journey though, because even as short as the career might have been, obviously you set a goal, you went after it, you achieved that goal. No fault of your own, I'm assuming you got hurt. But the question is, do you see for yourself or what you've seen in the league over the years, parallels that have maybe taught you lessons or prepared you in any way for the deal-making process and business building process that you've now gone through as a professional career?
I don't think there's any doubt. I mean, the coaches that I played for, taught me things that were incredible. When we were coming up, we knew that we were going to play. If we had the chance to play in the NFL, it would be great. We might make a little bit of money, but nothing like the money that they're making today. And when my dad played, he always had a job in the off season. As I told you, JP, my dad was a minister, and he still is a minister. And so he did that in the off season. He went to seminary and then did his ministry work, built his ministry over a period of 50 years. And so, that in itself taught me a lot about hard work. And my coaches, Grant Taft at Baylor, would always tell me, you find out who you are when adversity strikes. And so, my career has been built on just a long-term learning experiences, building relationships over a long period of time. telling the truth and trying to be a purveyor of truth and not just getting too hyped up with it, too involved with the deal and the hype of the deal, and just trying to do the best job we possibly can for everybody involved, the advisors that we work with, the investors who invest alongside of us, and then the fundamentals, the blocking and tackling of reporting. And we really pride ourselves on how we report. We report every quarter, but through this COVID period, this period that we've had right now, we've been reporting weekly to all of our limited partners and keeping them apprised of what's happening with each property. So, yeah, I think there's a great deal of parallel, JP, in the fact that, you learn your craft over a long period of time, and it's a great deal of fundamentals, and we're constantly learning from the experiences that we've gone through and what we have, the things that are always coming up. We always know that there's a new learning experience that's coming up in the real estate business. Right now, we're going through something that's incredible in the coronavirus, is COVID-19, which who could underwrite, such a thing as this? And I could never imagine a black swan event like this. But here we are in the middle of it, in the midst of it, and we're getting to learn a lot again.
I like your term, we're getting to learn a lot. I call those learning experiences myself as well. As you said, this is unprecedented, an unprecedented, historic, worldwide, global impact. You mentioned that your coach at Baylor talking about you find out who you are when you're faced with adversity. Obviously, this is a big deal. The hospitality industry, among a few others, have taken it really on the chin. But my guess is, and I want to get your input on this, my guess is there's maybe a mixed feeling about this, because there's what you're in right now, and then there's what's most likely going to follow over the next 2 or 3 or 4 years. Can you comment at all about how COVID has affected your deal flow or deal making process now, and where you see this going in the real estate industry, especially in the hospitality industry, over the next few years as we see this play out?
Well, we've been really impressed with the wonderful attitude of our lenders, how well they've worked with us, and how really their great attitude in working with us as we negotiate forbearance agreements. We think that we really are excited about it, because I've lived through the Graham-Rubin Tax Reform Act in '86, the downturn in '91, the downturn in 1996, and we had another one, a horrible one, the depression that people talk about in 2006 and 7, which was horrible. And then, of course, what we're going through right now. So we think that there's going to be a great opportunity because of what's going on in the COVID, because of what's happening in all facets of real estate. We think at some point in time, that attitude, the gracious attitude that we experienced with the lenders, is going to have to turn a little bit rougher, because if properties don't have the dollars to pay payments, ultimately, after all the government stimulus runs out, the banks are going to have to take back some of these properties. So we think a great source of acquisition will be through the banks. We also think there will be a lot of possible acquisitions through the REITs, some of these various owners of real estate that are going to have to offload, a great number of properties. Not only hospitality properties, but we know that retail has gone through a tremendous change, before COVID, because of the general public deciding to shop online and not to go to the malls and to the typical foot traffic storefront retail shops that they typically have been going to. And so there's been great change, but I think COVID is just going to exacerbate all that and move it forward. And, because office, there's a lot of talk that office will not be used in the same way, that there's going to be no need for central business district offices. We don't know if we think there will be a lowering of demand for that, but we just don't know to what extent. I find myself in this situation, the COVID experience, when people ask me these questions, but just the fact I really don't know. because that's the truthful answer. I don't know what the ultimate outcome is going to be, but we do know that in all those different times that I've talked about, there has been a great opportunity to acquire real estate. And so that's what we're preparing ourselves for right now.
Billy, let's look back for a minute. You've raised a great deal of money in the last 15 to 20 years through the broker-dealer communities. And that would be utilizing the Reg D and the private placement offerings. Can you give us what you've learned from that experience?
Yeah, I just think that, that was, of course, Paulie, thanks for the opportunity to answer that question. I think the biggest thing that we've done is that, we've built our relationships with different broker dealers. And I think it's built on a basis of just good, honest business dealings with the principals of the broker dealer firms. They know that we're going to tell them exactly what's going on with the property and report the exact truth, not ever hide the ball, and tell them what's going on with each property. And we've had a great experience. We've done about 31 different offerings. We've had 11 go full cycle. We're getting ready to have 3 more go full cycle. We have 2 more offerings that are going to come out in the next month. So we'll be at 33 total offerings with about 14 that have gone full cycle since 2006. So that's not a great number of offerings, but it represents about 200. When we're done, it'll be around $300 million of total amount of cash raised and about $1 billion in real estate required.
That's wonderful. And I do want to go back to that, your latest offering, because I know we spoke about that the other day. But how do you manage your relationship with the reps that you're currently doing business with?
Well, one of the ways that we manage that relationship is the fundamentals of reporting. We are constantly, every week, we have a report that comes out on Wednesday night. And we just went to that weekly format just because we think the advisors and their clients need to be communicated with. And so we just try to update. We take some basic fundamental information. Right. 2 of the things that we show every week are the occupancy of our properties. And we show the trailing weeks and months of occupancy so they can see the growth pattern. And then we show travel, because travel obviously very much affects the hospitality industry. So we show the TSA numbers, turnstile numbers from the Safety Administration, the Transportation Trade and Safety Administration, that we all go through the security checkpoints. And this just basically shows the numbers, the gross number of travelers going through those TSA checkpoints. And we've shown that growth. So we show that on a daily basis. And so those advisors know they're going to get that report every Wednesday night, and it's going to also show them anything that's pertinent, that's germane to their property, and that their advisors and that their investors would want to know. And that goes not only to the advisors, but also to the limited partners.
I was going to say that knowing you for many years and showing up at conferences together at a few along the way, do you now, because of COVID, is it now more virtual presentations that you do?
It really is, Paul. We had a dinner meeting last night, which was, I guess, the first dinner meeting that we've done since March. And so it was a group of people that were with one advisor, and they were comfortable getting together. And so we went and had dinner with them. But that's the first meeting that we've had. Obviously, we practice social distancing. Distancing, we wore a mask and things of that nature, but try to be as safe as possible. But most of what we do now are Zoom meetings, and then, of course, communication, email communication, communication by letter, just basically written communication.
If you're listening or watching the Deal Flow Show, you can get more episodes at thedealflowshow.com. And you can also subscribe and follow us for future episodes as we release them. Paul, as I was sitting here thinking, you were asking the question about the relationships with reps, and he was talking about the dinner meetings and such. The digital landscape in general, how has that affected or evolved your capital raising? Is it still for you? I know COVID has affected things, and we just discussed that. But in general, as things have become more and more computerized and digital, how have y'all evolved to keep up with those technologies?
We've really had to step up our game and really get familiar with all the different digital vehicles to use to communicate with advisors and with their clients. And we thought that we knew how to use all the different tools pretty well, but we've become much more proficient with the different formats, the different media formats that you could use to communicate with folks. And we all know who they are, what they are, and which ones we use. And so like Ring Central, Zoom, those different media formats are vehicles or mediums. We use those a great deal, and they're very, very, very helpful.
I want to shift gears just a little bit and talk less about your specific company or deals and talk about the underlying principles or skills or strategies. You've been involved in the deal-making process for many years now. How do you prepare for the game? If you go back to the NFL as a metaphor again, obviously there's a lot of mental preparation, physical preparation, watching tape, all those things that happen before that. But in the deal-making process, what are you doing to prepare for the next deal that you're engaging with your team and with your counterparts that you're engaging with on a property?
It's just as very detail oriented. I mean, we have an underwriting process. I have a partner named Scott Palmer who has been my partner for many years, and he's out on the marketplace looking at hundreds of deals for us to find one. And we, both vet those deals. When he gets them to the point where they're, to the final 10, we take those final 10 and we vet them individually. He gives me what he thinks about the properties, and I review the properties, and we talk about the different deal points. But, for us, JP, it's always about value. Okay, what are we buying the property for? What's our basis in the property? And we think that that's just a fundamental thing that you can't ever get away from in the real estate business. Is what did you pay for the property? Because what you paid for the property is going to determine how profitable that asset or that investment is going to be for the limited partners at the end of the day. And so we're very much keyed into those fundamentals. What did it cost you? What's the replacement cost of this property? If we had to build it today, what would it cost? Are we better off to buy this existing asset at this basis, or should we go and try to build a similar asset? And so those are the things. What's my debt going to cost me? How much leverage do I put on this property? Because obviously broker-dealer community is very sensitive to leverage. And so are we. And because they are, we are. And so we're very cautious about that. Obviously we're sensitive about fees. I mean, how you can have a great low basis in the property and then just totally put so many fees on it that it makes zero sense financially. So we're very sensitive to that as well. And, we've had long-term relationships with broker-dealers, and that's because we listen to what the broker-dealers tell us about what they're willing to pay and what they're not willing to pay, and what they feel like their advisors can accept and what they can't accept. And so we listen to those things.
If you go into a deal and the numbers are right, are there any other deal stoppers, deal killers for you?
Oh, there are. There are a lot of them. I think that, a management company that's in a property, an existing hotel that you can't get, you have a long-term management contract that's in place, that's a deal stopper for us. Obviously, it's got to pass a whole lot of hurdles. The location of the property is critical. We try to be close to what we call room night generators on our hospitality properties, close to convention centers, hospitals, colleges, things that generate room nights that will make that property or cause that property to have some success. We don't want to just be another property at the corner of an intersection on a freeway. So we want to have a great flag. Inferior flag is another one. I mean, obviously, if you don't have a good flag, and that for us, it's Marriott or Hilton, or Hyatt place. So we're very cautious about the flag. There are a lot of deal stoppers, JP. Those are just a few.
I did want to ask, what about a deal that got away? Can you talk about that? Was there a deal that got away from you that you just regret now?
I think there's always deals that we underwrote too hard and probably should have been a little more forgiving on. I can think of one in Jacksonville that we missed, that DoubleTree that we missed on, and it ended up being a hugely successful project. And Jacksonville, Florida, I don't want to say much more because y'all probably all know the property, but great property. Probably we missed on that one. There's lots of properties that we missed on right after the downturn in 2006. A lot of properties and markets that we missed on that I wish that I'd have been more aggressive. But, I don't have any marks on my track record either. So I guess, you thank God for unanswered prayers. I mean, maybe I didn't get that one, but maybe that was a good thing because we don't have any, thank goodness, on our track record that we put together over the last, years from 2006. We don't have any properties that have been a loss for our investors yet.
So the particular types of investors, you mentioned the dinner show, pitch last night that you had dinner with an advisor's clients. What is the mix, if you don't mind sharing, what is the mix for y'all of retail versus institutional versus family office money, et cetera?
Oh, that's a great question, JP. We basically 90% of our money comes from the broker-dealer financial services community, either RIAs or brokers, advisors that work for different broker-dealers. 5%, the balance of that 10% would come from high net worth individuals.
I know your son was on earlier and potentially was going to be on with us. This is obviously a family business still. What's the future? How do you as a leader, and I'm asking this selfishly, you got a couple of years on me, but selfishly, how do you direct a business and then bring your family in and involve them in such a way, but also the company instill and implant the values, but also allow them to evolve with new technologies, new ways of doing business? How do you make all of that mix work?
Great question. The question that we get from every third-party due diligence advisor that comes in here, we have to do obviously third-party due diligence for all of our different broker-dealers, and they always ask us about succession. And again, because it's important to the broker-dealers, it's become very important to us. But in order for us to move forward into the future, we need to bring young people in that have a vested interest in the company, that want to see it succeed. And so I've started training my son. He's been here with us for 5 years, that he's been working in the business. My wife works in the business. I have another son that works part-time in the business. And then of course I have a lot of very seasoned professionals that work with us. Becky Welch, she's been with me from the very beginning. She's here with me. We've worked together for over 30 years. Scott Palmer, my acquisition partner, is HKP. He's older than I am, if you can believe that. And, so we're working to find a successor for him, a person who will take his position in acquisition. And so we're constantly looking for new young people to bring into the business. Young people have a different view about technology than I do. I mean, my son just naturally works on the computer just so much because he obviously used it in college and, in all the positions he held before he came here. And they just take to it much more quickly than I would. And I think the kids that are Joshua's children, that are my grandchildren, they're going to be much more fluent than he is, I'm sure. But it's just something that we're constantly working on, thinking about the future, thinking about, when I step down or when Becky steps down or when Scott steps down, who's going to fill their spot. And we have, people that we have in position now and that we're looking at to hire in the future to take those individuals' positions.
Billy, tell us a little something about yourself, professional organizations or charities that you may belong to.
Thanks, Paul. I mean, my father, as I think I told y'all, is a minister. He worked in prison ministry for over 50 years. And so I'm on the board of my father's ministry and have been on the board for several years, for longer than I care to mention. And so that's very near and dear to our hearts, working in prisons with people, inmates, and because all the inmates that are in prison now are going to get out someday. And so we try to share our faith with those inmates that are in prison and give them a reason to stay out of prison. And so that's one of the things that we do. And then I have my firstborn son that has Down syndrome. And so because of his disability, I got involved with Special Olympics. And so I've been served on the board of Special Olympics Texas for many years. I guess 2 years ago, earlier this year, I stepped off the board. And so, but I've had a great time working with Special Olympics, and they do a great job of not only working with the young people and the different Olympic, I don't know if you've ever been to a Special Olympics event, but it's amazing. They do all the sports they have in the Olympics. These young people participate in the events we organize. But more than that, they support the families of those kids. And so it becomes your circle of friends. Not only do you go and watch your children compete on the weekends, but you become friends with the parents of those kids. And so it's a huge support organization. We really love that. So you'll see on our website, those are two organizations that we support. And we have, I guess, since my son was born, he's 38 now. And my father's ministry is 50 years old. So we have supported those two ministries for a long time.
Over the years of watching other deal makers in the process, could be people you've sat next to on your side of the table or people on the other side of the table or you've been involved with. What do you believe are the characteristics of truly exceptional deal makers?
Well, I think that it doesn't depart from what I talked to you about earlier about the work ethic that you can see in a man or a woman's life. I mean, their work ethic, because it's reflected in the people that they have around them. And so, we think that when I find somebody that's honest, that's hardworking, I can name a few people in our industry that I just really respect, that are fine examples of that. And some that have already passed that I worked with. I had the good fortune to work with. But I worked with a lot of people at Hank Dickerson Company. Bill Duvall comes to mind, who's the chairman of Lincoln Property Company, that I think is just exemplary person that I would like to pattern my life after. Great guy, great deal maker, tremendously successful company. So there's a lot of them. I've been very fortunate to work for a man like Hank Dickerson and to work around a circle of men and women in the industry that were great deal makers and great business people.
You're listening to The Deal Flow Show or watching, and you can get more episodes at thedealflowshow.com. You can watch or listen to past episodes and subscribe or follow us for future episodes. I'm JP Maroney. This is my co-host Paul Nicolini. We've got Billy Glass on with us today from Gentry Mills Capital. And, the common thread, and especially with guys that have been around the business for a while, is your word is your bond. Do what you say what you're going to do, show up. But I liked something you were talking about. You said you've never had a real big mark on any of the deals you've done where you had to go back to the investors and say you lost money on that deal. So that's a positive. But when you face hurdles or setbacks or obstacles, how do you deal with that, the mental side of that game?
Well, I mean, mentally, you have to just face what's happened, and then just report. I mean, tell people what's happened, explain to them what's happened, and I just don't shy from the facts. I mean, I've just learned that over a long period of time. My wife tells me that, that she's seen that growth in me through the years. That sometimes I'd want to tell people what they wanted to hear, which is not necessarily the exact hard truth. And, of course, as you get older, you realize that the truth is the best thing that you can say. And so you can't shy from the facts. And so I just come out with what's happened, what our plan of attack is. I always try to come up with a plan of attack, because I don't think defeat is acceptable. And so I always come out, I try to engineer a way through the problem. And that takes time, and it takes patience, it takes experience, it takes the counsel of other great folks in the organization to try to engineer a way through a problem. And that's sort of what we try to do.
Billy, what kind of people would you like to connect with from our audience or our guest speakers?
Appreciate that, Paul. I mean, I just like to visit with other broker dealers that like what I've said, that are interested in looking at a company that's a small company with a great track record. You look, we have a lot of our properties that didn't hit pro forma, but they didn't lose money for investors. Okay, and we're proud of that. We didn't just do that through the good markets. The first deal that we did, I've told you about, the Hilton Garden Inn in Houston, Texas, by the I-10 and Gary Ashford, that was built in 2006. And if I'm not mistaken, 2007 was the beginning of the Great Depression, or what people have called the Great Depression, after the real Great Depression that happened earlier in the century. But, that was, we ended up selling that property for a 6.7 cap. Excuse me, a 6.7% annualized rate of return. We held it for 5 years. And that was our worst return that we've had in our history. That's not to say that we won't have some properties that are affected by the coronavirus that won't do poorly as well. And I'm not saying that we are going to be able to maintain that track record, but right now we, as I said before, we've sort of engineered a way to get through the situation and still generate a return, and a good return, for our limited partners. So I would say that a broker dealer, advisor, and RIA that's interested in what we do, and that kind of a philosophy, that we'd love to visit with those types of individuals. Now, I have a project that I wanted to talk to you about that if you want me to, Paul, it's a situation on an existing property that we have, where we had the opportunity, because of the coronavirus, to buy the note at a discount. And so if you'd like me to visit about that, we can at some point in time, Paul.
Would you like to say a few words about it now?
Well, yeah, it's just a property that we have in Washington, D.C. It's a Hyatt Place Hotel, 200-room Hyatt Place Hotel. We refinanced that property. We bought it in 2017. We bought it at what we felt was a great price. The property is located in the NOMA district of Washington, D.C., which is north of Massachusetts Avenue. So NOMA is an acronym that stands for North of Massachusetts Avenue. If you've ever gone to Union Station in Washington, D.C., you get out of Union Station, you look south, and you're looking directly at the Capitol. And the Capitol building is 1 mile south of Union Station. Our Hyatt Place is 1 mile north of Union Station. So that you could walk around the back of Union Station, go out the north side of Union Station, our property would be 1 mile north. That whole district north of Union Station is called NOMA. And so we bought that property. We refinanced it in 2000. We refinanced it. We bought it in 2017, refinanced it in 2019 with a lender. And that was in, I guess that was in October of 2019. And we were rocking along, got a great rate, and we're rocking along. And then NOMA struck in March. And they made the decision, that lender arbitrarily made the decision to sell our note into the market. We were working with them, trying to get a forbearance agreement negotiated with them. They drug their feet. We couldn't get the agreement negotiated. They ultimately sold our note through a broker in Chicago called Eastdil. We all know who Eastdil is. We got a package. We were able to buy it. We were the high bidder, and we bought it at a $9 million discount. So we bought a $50,750,000 loan for $42 million. And it's going to greatly benefit the existing investors. And then, of course, anybody else that wants to invest in that note, it's going to make a really, really nice rate of return. A rate of return that I don't typically quote, but it's higher than any return we've ever made in our portfolio. It's north of 20%, but we feel there's no guarantees for that. Obviously, we could have a resurgence of the coronavirus, and we could have a slowing of the market, but we feel like if everything continues and we get a vaccine and good therapeutics and the markets open up a little bit, we think we're going to make a really nice rate of return on that project.
Fantastic. How can folks get in touch with you if they would like to reach out to you?
Obviously, you can call me here at our office in Dallas at 972-759-8725, or you can talk with me or Becky Welch, our vice president. Just give us a call. We'd be happy to get back in touch with you and visit with you, or you can go to our website at www.gentrymillscapital.com, and we'd love to just give us a holler. We'll get together and we'd love to visit with you.
Excellent. I'm sure some of our audience will get in touch with you. On behalf of Paul Nicolini, myself, JP Maroney, our team here at Harbor City Capital and the Deal Flow Show team, I'd like to thank you again for taking the time to come on the show, share your wisdom, share your information, and we look forward to getting to know you better. I know Paul's got a great background with you and has said some great things. Look forward to meeting you maybe when I'm back in my stomping grounds in Texas. But thank you again for coming on, Billy. I appreciate it.
Thank you, JP. Thank you, Paul. Thank you, JP.
Once again, if you're watching or listening, this is the Deal Flow Show. You can get more episodes at thedealflowshow.com, or you can subscribe to future episodes. I'm JP Maroney, Paul Nicolini. We'll see you again in another episode very, very soon.
For more episodes, visit thedealflowshow.com and subscribe.